Stock market is soaring to record levels. We just hit a new high on Friday, and I think we're hitting another new high today because there's tremendous optimism having to do with business in our country.
Well, the president touting stocks hitting record highs, the 49th record high for the Dow just this year. That's never been done before. We still have a ways to go this year. Markets are way up since the president's election win almost a year ago. In fact, about $5 trillion in market value added since that time. But Black Monday was, after all, 30 years ago this week. So should we be worrying about history repeating itself? And is it dangerous to brag about a performance that could, on a dime, reverse itself? Let's ask Alan Nuckman, who says that stocks can keep headed higher despite those fears. Heather Zumaraga with us as well. It says prices might already be getting a little too high. So, Heather, you're worried.
I'm sorry, what was that?
You're worried.
I'm a little bit concerned. Well, when you have President Trump touting, rightfully so, the stock market performance since he was elected, you start thinking, is there still enough optimism left in these markets to continue higher? A lot of the flows have already come from abroad and retail investors coming off the sidelines in fear of missing the market highs. So is a lot of cash already in this markets? You know, we're all watching corporate earnings this week. That's going to be the key to see if we can continue higher in these markets.
And they have been good thus far. It's still early, and I guess this quarter is expected to be an up quarter as well, continuing almost under a spate of better than 7 or 8 quarters like that in a row. But, Alan, do you think it's dangerous to brag about markets that could turn on you? Ronald Reagan was loath to talk many times about the markets because he always felt that he could be trapped if someone just all of a sudden cites a crash, which happened under his watch. So how do you guard against that?
Well, you don't talk about a no-hitter, so that's just superstitious. But the fundamentals are solid. There's no choice right now between treasuries and equities right now in a chase for yield. Yes, we are come a long ways, but past presidential performance has been much more significant. We've had a healthy bounce here, I think, whatever, 15% in the S&P since November. But if you compare that to Clinton, over his tenure, it was 265% increase in the stock market. And under Obama, it was 235%. So there's still a lot more upside potential here. And it comes back to earnings. We're expecting modest earnings growth, so I think we can overachieve. We're only looking for about a 3% growth here this quarter. And you saw some of the numbers out of the banks. The profits are amazing. You had J.P. Morgan make $7 billion for the quarter, Bank of America $6 billion. So corporations are doing extremely well, and that's what drives the market.
If he's right, then, Heather, that will keep this going a while, or they hope a while. But anything can undo it. Obviously, an Abbott event, a Black Swan event, a North Korea implosion, that sort of thing.
Yeah.
Or maybe not getting tax cuts. Let's say the latter. The tax cuts are delayed or denied. Then what?
If we don't get tax reform, I think the markets will pull back by the end of the year. So perhaps Alan will hopefully prop up the markets. Dow 23,000. I'll get my baseball cap ready. But until then, I just think it may be okay to be cautious and wait for some sort of pullback. But then again, Alan will win this debate because he can say that investors have been waiting on the sidelines for a long time for a pullback, and it just hasn't come.
What would you look for, Alan, where you say, all right, now that's it? It used to be said in the 80s before the great, tumult on October 19th, when the cab driver is investing heavily.
Giving you stock tips.
But that was happening for a good while. And I'm just wondering, what do you look for that would give you pause to say, all right, enough?
What I look for is people are less fearful. When no one's afraid of a crash and we don't have that discussion of a potential crash and everybody's convinced the market's going to go higher and higher. But from a technical standpoint, markets aren't going to go from straight up to straight down. Yes, we had that 23% fall Black Monday, but that was a very unique situation because technology was much different than it is now. And there are many more markets.
In short order. I mean, there is that history here.
Right.
You know, another one, Heather, that you hear a lot about, new investors who follow the headlines, follow developments, hear guys like you and say, gee, I guess I should be in this thing.
When do I get in?
Right.
Yeah.
What do you tell them, Heather?
So, they feel like they've been missing it. So that is also propping these markets up, is fear of missing it. So you're seeing positive flows in the market. There's nowhere else to go. Be patient and wait. If you want some exposure to the markets, you want to look for some value names, not the big Facebook, Amazon, Netflix, Google, I know they're very sexy and they have had a tremendous run, but that may not be the best place to put your money right now, given the run that they've had. So it's okay to wait a little bit with some cash on the sidelines to hedge your bets.
All right. The other aspect, Alan, real quickly, is interest rates. They've been very, very low. They're not as low. They're nothing like I can remember. When my wife and I got our first house, it was double digits, and we thought we were geniuses. Now, the fact of the matter is, to a lot of young people today in the same position, they see a mortgage going to 4 something and think they've missed the boat. So our perspective has changed. Does that worry you?
Exactly.
That a lot of people forget the not-too-distant past?
Right, but until the interest rate environment changes and we're back up to our normalization, which is about 4.5% for short-term rates, like I said, the money's going to go into the market. We're a long ways from that. But let's remember, it's not just us or the U.S., let's say. If you look at Germany's up 20%, France is up 20%, Hong Kong, Japan, South Korea, everybody's up 20% since the election. So it's a global reboost here where everybody's performing and everybody's doing well. And I think, some of that pessimism has been shaken out. And you can focus on the fundamentals. And the fundamentals of corporations are very, very solid.
Indeed they are. Guys, thank you both very, very much.